Let's continue with the general advantages of an audit. General advantages of an audit. Then point number one, it facilitates minimization of errors and fraud. It facilitates minimization of errors and fraud. It facilitates minimization of errors and fraud. Number two, it facilitates the filing of tax returns. 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 Number three, point number three, it gives assurance to the directors. It gives assurance to the directors. It gives assurance to the directors that they have complied, that they have complied with their statutory responsibilities, that they have complied with their statutory responsibilities, that they have complied with their statutory responsibilities. Next, it contributes to the improvement. It contributes to the improvement. It contributes to the improvement of the company's accounting, and internal control systems, Next, it may facilitate compliance. It may facilitate compliance. It may facilitate compliance. It may facilitate compliance with the laws and regulations, affecting the company. With the laws and regulations affecting the company. So let's move on to the disadvantages of an audit. Disadvantages of an audit. Point number one, from the definition of an audit, it should be made clear. That an audit may not be a guarantee. For the future viability of an entity. Point number two, an audit may also not indicate. Aspect of the entity, e.g. type of employees, types of employees, in terms of competence and effectiveness, in terms of competence and effectiveness. Number 3, audits are based on historical information. Audits are based on historical information. Audits are based on historical information. And the auditor's report, is normally produced sometimes after the financial period. After the financial period. Our next point, audits may be considered to be expensive. Audits may be considered to be expensive. Audits may be considered to be expensive in terms of resources. In terms of resources. In terms of resources. Point number 5, the existence of inherent limitations. The existence of inherent limitations. The existence of inherent limitations in an audit, may also result in wrong decision by the users of audit reports, Such limitations include point A, the fact that audits involve judgments, some of which may be subjective. Point B, the fact that auditors may use techniques, such as sampling, which means that they may not check, every item in the account. Then point C. The fact that an audit may entail assessment. Of risk, which may not be accurate, as well as assessing accounting estimates, made by the preparers of the account. account. And last one, there is a possibility that the client staff, there is a possibility that the client staff, there is a possibility that the client staff may collude in an attempt, to hide information, from auditors, resulting from wrong audit judgments, resulting from wrong audit judgments, resulting from wrong audit judgments, resulting from wrong audit judgments. So those are the disadvantages of an audit. These are the last point is very quite important on inherent limitation of an audit. Those are 4 points. Need to take note of it. Your part. And that will now bring us to the end of that topic on nature and the purpose of an audit. Our chapter 1 comes to an end. So, sijui kama tuliangalia some questions. I think tuliangalia pertaining to interim audit, final audit with regard to the procedures of the work done. I think that what we did. So we can now move on to the second topic, the second chapter. Topic number 2. Topic number 2. So topic number 2 is assurance and non-assurance engagements. Assurance and non-assurance engagements. Topic 2. Topic 2, assurance and non-assurance engagement. So auditors are normally engaged to offer a number of services. These are services, they could be audit services and the non-audit related services. So at the end of this particular chapter, we'll be able to understand the difference between assurance and non-assurance engagements. Now this word assurance, we have quite often use it maybe on a day-to-day life, especially whenever you're giving some information. And the other person like it's not trusting you, they will utamwambia kwamba I'm giving you my assurance, mean that yes, whatever I'm giving you is there to enhance some degree of confidence in you. So also whenever auditors are engaged to do an audit service, they do provide what we call an assurance. Now, really to understand this concept of assurance, we can use analogy, just a story analogy to be able to understand how auditors and assurance function do operate. Let's say come to two parties up. Two parties here. These parties are into a sale exchange process where one side took on the seller, another side took on the buyer. We have the buyer. Each person has their own individual interest. The seller, they're interested to make money. And if they make money, at the end of it, they're able to make what? Profit. So they are profit oriented. The other side, the buyer who wants to buy an item or maybe an asset from the seller. So if they, whenever they're going to spend that money, they want to be assured of what to call their value for money. Value for money, that's what they want to be able to obtain. So there is a relationship between the two. One person is selling, another person is buying whatever is being offered for sale. So let's say what is being sold here, what's being sold now between these two parties is a motor vehicle. A motor vehicle. The buyer is now seeking for a seller who can sell for him or her that particular motor vehicle. Now for this buyer to make a decision on to buy this particular motor vehicle, the buyer will require what to call information. You need information to make what? Decision. You require information to make decision. This seller is in possession of this motor vehicle. Understand maybe the condition, accurate evaluation of this particular motor vehicle. So if I find there is one party who has got more information as compared to the other. That aspect where one person has got more information as compared to the other, meaning information asymmetry. Information asymmetry. Information asymmetry. One person who has more information as compared to the other person, which we can also refer to information imbalance. Information imbalance. So to reduce that doubt, to reduce that element of doubt on the credible information to be used by the buyer to make that decision, this buyer will need to engage the services of another third party, who is called now the mechanic. Mechanic is now the expert. Expert about understand the assessment of this particular motor vehicle and apparently the credible report to the buyer. All of this guy is in good condition, or maybe it's not in good condition. The amount that the seller is requesting or is asking, yeah, that's amount is justifiable. It's a fair price, being that he is an expert in that particular area. So you come and examine or come and assess this particular motor vehicle based on his criteria, or maybe the standard way from to bring that measurement, give that information back to the buyer to facilitate that decision of making to buy the car. Sasa in audit or just any assurance engagement, there is a kind of interaction that takes place, where this seller up and now the management of the directors. Their work is now to prepare the financial statements, which do contain that information that shall be used by the buyer and seller, who are not the users of the audit financial statements, wants to make certain economic decisions. Then now to reduce that to reduce what we call the information risk, they will engage a mechanic who is now the auditor or the questionnaire. The auditor or the questionnaire to come and examine what you call now the subject matter. The motor vehicle is now the subject matter. This subject matter is coming with the financial the financial statements. So Nakuja na examine the financial statements and yes, based on my opinion, the financial statements or the subject matter do portray or reflect a true and fair thing. So that's why we normally say assurance is very important in an audit, and audit is also defined to be an assurance function. Because at the end of it, you must be able to enhance the degree of confidence of the users or such kind of information that they come from a credible, reliable source. Now, we also know that there is a qualities of a good information. Not all information are very important when it comes to making a decision. Like a person basically what you call reliable information. And how to tell information is reliable? By looking at the source. If that information is coming from the expert or maybe can feel that this information is credible, in the part of there is a high level of reliability. Another one, people want to call a timely information. The information should be available at a sufficient time to be able to make a certain decision. Information also want to be accurate. People want accurate information. People also want complete information. People also want complete information. So all those things are possible. We need an auditor of the personnel to come and examine the financial statements and give a report or some form of level of assurance pertaining to the company's financial performance. So there are two reasons why audit sometimes is needed. One is because of what you call increase the confidence. You just want the confidence to be increased for the using credible information. That's the first one. Then if you're buying an item, you want to minimize making losses. Another reasons why you need assurance of an audit function is to reduce or minimize the risk. Reduce or minimize the risk. Reduce or minimize the risk. So I'll just start by the definition of the term assurance engagement. So let's define the term assurance engagement. So what's an assurance engagement? What's an assurance engagement? So utapata kwamba in our definition, some of the elements mentioned hapa will appear. Tuko na the responsible party ambao given the responsibility to prepare the subject matter. This is about the financial statements. Tuko na the users, the intended users, the recipient of that report, where now the auditor or the personnel has to express what? An opinion over them. There must be also a criteria used to measure or to evaluate that particular subject matter, of which there an opinion shall be expressed. So how do we define the term assurance engagement? Assurance engagement. Definition of assurance engagement. Definition of assurance engagement. So this is how we define. An assurance engagement is where an assurance engagement is where an assurance engagement is where a practitioner is engaged to evaluate or measure a given subject matter, that was a responsibility of another party against a suitable criteria and express an opinion meant to provide the intended user with a level of assurance regarding the compliance of the subject matter with the identified criteria. So that's how we define the term assurance engagement. So there is a practitioner there being engaged to evaluate or measure a given subject matter that was a responsibility of another party against a suitable criteria and express an opinion meant to provide an intended user with a level of assurance regarding the compliance of the subject matter with identified criteria. So after that definition, let's move on to the objectives of assurance engagements. 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 So what are the objectives of assurance engagement? So number one, to enable the practitioner to provide a level of assurance. to provide a level of assurance, to provide a level of assurance, either reasonable assurance, either reasonable assurance, either reasonable assurance, or limited assurance, or limited assurance, or limited assurance. So that's the first objective. Yes, Helen, number. Okay, sir. Then number two objective, to obtain sufficient appropriate evidence, to obtain sufficient appropriate evidence, to obtain sufficient appropriate evidence as the basis of expressing a conclusion, about the subject matter, of expressing a conclusion about the subject matter, of expressing a conclusion about the subject matter, of expressing a conclusion about the subject matter. Number three, to highlight any relevant matters, to highlight any relevant matters, to highlight any relevant matters, to highlight any relevant matters in accordance to the requirements, in accordance to the requirements, in accordance to the requirements of the international standards, of the international standards assurance engagements, of the international standards assurance engagements, of the international standards assurance engagements. Let's go to a subtopic, audit as an assurance engagement. 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 So how do we perceive audit to be an assurance engagement? So write the following, that the term assurance is used to satisfy two purposes. The term assurance is used to satisfy two purposes. The term assurance is used to satisfy two purposes: by a practitioner, namely, number one, increased confidence in user information. Increased confidence in user information. Increased confidence in user information. Then point number two, reduce information risk. Reduce information risk. Reduce information risk. Paragraph. Audit as an assurance function. Audit as an assurance function. Audit as an assurance function is a professional service. Audit as an assurance function is a professional service. Is a professional service performed by a practitioner. Performed by a practitioner involving evaluation of evidence, involving evaluation of evidence, involving evaluation of evidence and various assertions, and various assertions, and various assertions, and various assertions, and comparison of the assertions, and comparison of the assertions, and comparison of the assertions with the relevant criteria, with the relevant criteria, with the relevant criteria, with the relevant criteria, in order to be able to instill confidence, in order to be able to instill confidence, in order to be able to instill confidence on the users, on the users of the information, on the users of the information, on the users of the information. That's how you. You're good, huh? Yes. Tumepatana kweli? What is your first class? Okay, sir. Yes. Sir, karibu. Naitwa nani? Jacqueline. Oh, Jacqueline. Yes. Sir, karibu. So, how are we going to now? Not yet. So, unajua now. It's time goes now. Okay, so. So, please do. Confirm yangu hapa. So today in the summer, you've seen in the second chapter, we are in topic 2. So today the summer. Tumeanza topic 2 size. So tumefika hapo kwa nini? To instill confidence on the users of the information. Yes, there is a word in appear hapo. This one. Assertions. The word hapo assertions. Whenever managers are preparing something on the financial statements, there is expressions that normally make, either implied or expressed. These are statements is what we're referring to the assertions, the financial statement assertions. Like how to a statement of financial position. We have got current assets there. Like just like an inventory. Inventory. It's a 6 million. The value for the inventory is 6 million. So that representation embodied in the financial statements is what are referring to what assertions. So what does an audit is to verify how valid is this particular assertion, how correct is that particular assertion. We have different forms of these assertions. Like one way, normally used to call the law as a way to identify the assertions to be verified by the auditor. Just check as the financial statements being prepared in line with the identified financial reporting framework. For this being upper, in terms of the financial statement assertion, will be confirmed what you call the disclosure and presentation. If valuation of the inventory has it been disclosed and presented in line with the accounting standards. Alafu hapa tuko na support any ownership. If they are asserting how they have inventory of 6 million, does that inventory actually is owned by the business? Another one tuko na nini? The value, V for the valuation. So they are asserting about the valuation of the inventory. How this inventory is a 6 million. The workers of audit is now to come and verify. Is that inventory accurately valued to be 6 million? Love is about any existence. They are saying, Papa, yes, this inventory do exist. You also as an auditor to confirm whether it actually do exist. So this is one of what the such as being verified by the auditor, just to confirm if that information is valid, is it correct or incorrect. Okay, let's continue. The following are various assurance services. The following are various assurance services The following are various assurance services. The following are various assurance services that may be provided, by a practitioner, So which are these particular services? Number one, bookkeeping and accountancy services. Bookkeeping and accountancy services. Bookkeeping and accountancy services. Bookkeeping and accountancy services. Number two, auditing services. Auditing services. Auditing services. Auditing services. Number three, tax consultancy services. Tax consultancy services. Tax consultancy services. Number four, financial management services. Financial management services. Financial management services. Financial management services. Number five, human resource consultancy services. Human resource consultancy services. Human resource consultancy services. Next, project management services. Project management services. Project management services. Next, review of prospective financial information. Review of prospective financial information. Review of prospective financial information. Review of prospective financial information, e.g. budgets and forecast. E.g. budgets and forecast. E.g. budgets and forecast. And next, number eight, benchmarking services. Benchmarking services. Benchmarking services. Nine, review of internal control systems. Review of internal control systems. And next, value for money audits. Value for money audits. Value for money audits. 20 paragraph. Assurance services can further be categorized. Assurance services can further be categorized. Assurance services can further be categorized into audit related, and non-audit related services. And non-audit related services. And non-audit related services. The audit related services include number one, review engagements. Review engagements. Yes, they can be engaged to review the interim financial statements, which is used mainly for the purposes of declaring dividends. Such kind of exercise is a review engagement. Or sometimes parents are engaged to review the budgets or the forecast, or maybe the cash flow statements. The number two, agreed upon procedures engagement. Agreed upon procedures engagement. Agreed upon procedures engagement. Agreed upon procedures engagement. Yeah, so that can also be another form of assurance services where you're being requested to come and undertake some procedures. The client is making a request and you agree on the procedures to be performed. A very good example of agreed upon procedures during what you call the fraud investigation. There is a fraud allegation. So being asked to come and do what? do an investigation of that fraud. That's an example of agreed upon procedures, of which you shall provide a report to be used. It may bring that matter to arrest. The number 3 to go compilation engagement. Compilation engagement. Compilation engagement. Compilation engagement. As you do sometimes compile the reports, going to be examples of such kind of assignments which can be performed by the auditor. A very good example for compilation engagements is bookkeeping. Financial statements preparation. The bookkeepings of the financial statements are preparations. Another one is filing the tax returns. Filing the tax returns as example of the compilation engagement. Paragraph. The above assurance services can broadly categorize into the above assurance services. The above assurance services can be broadly categorized into the above assurance services can be broadly categorized into number 1, assurance services. Number 1, assurance services. Number 1, assurance services. Number 2, attestation services. Number 2, attestation services. Number 2, attestation services. Attestation services. The number 3, audit. 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 Engagements. Auditor engagements. Auditor engagements. Auditor engagements. Then you can draw this down here. 2. Point 2 is yes, Liz and Grace. Point 2 is attestation. Attestation is on our attestation services. Attestation services. Attestation services. Sasa unaweza ambiwa explain what's assurance services. So the keywords are, even though we're doing a review or compilation, is on any type of information. It can be the financial information or the non-financial information. The assurance express sample is a negative assurance. Then on the attestation services is doing a review or submission on financial information, not any type of information, just from the financial information. Like how is the financial forecast or prospective financial information. The level of the opinion is normally moderate. Then on the audit services is doing a review or submission on the financial statements. So you're being examined upon the subject matter is the financial statements. The opinion there is a positive opinion. Put a difference between this one upper and this one upper with regard to the procedures being undertaken. This was more detailed, extensive procedures being undertaken by the auditor, so that they're able to make that opinion. For these ones, some maybe lesser procedures like analytical review procedures, and also the inquiry can be done under the attestation services. Let's go to subtopic kwanza, elements of an assurance engagement. 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 So all assurance engagement has what we call the 5 basic elements. The 5 basic elements. All assurance engagements, they got the 5 basic elements. Now, any engagement that lacks the 5 basic elements is deemed to be what? Non-assurance what? Engagement. So all assurance engagements do have the 5 basic what? Elements. Now, any engagement that lacks the 5 basic elements is deemed to be what? Non-assurance engagement. That's the difference between assurance engagement and non-assurance engagement. We do use the word mnemonic crest to identify these particular elements of assurance. The crest to identify the 5 basic elements of assurance engagement. Where this C up there comes and your C is what we call the suitable criteria. Suitable criteria. Suitable criteria. So all assurance engagement, there must be suitable criteria. Criteria is just the standard or the benchmark. Criteria is somewhat the standard or the benchmark for measuring the subject matter. For measuring the subject matter. Like in the case of the financial statements, the criteria itakuwa nini? Itakuwa ni IFRS, or inaweza kuwa IAS, or inaweza kuwa nini? The caps and the applicable disclosure requirements. And the applicable disclosure requirements. And that's next number 2 Number 2, we do have that R upper. This R is what we call assurance report. Assurance report. Assurance report. Assurance report. So the report upper is now where now the opinion is normally expressed. The opinion is normally expressed, or the professional is able to provide some form of assurance to the intended users. Then next we have what E upper, number 3, E. So it's now for what we call evidence. So all assurance engagement, there must be evidence just around the facts and information which enables the practitioner to conclude about the subject matter. The number 4 upper to corner S stands for what we call the subject matter. The subject matter. So what are we measuring? What are we evaluating? Is it maybe the financial statements in the case of an audit? Then last one, number 5, to honor the T. The T stands for what we call the three-party relationship. The three-party relationship. The three-party relationship. The three-party relationship. Now the three-party relationship is one, and of course the responsible party, the one who measures the subject matter. The other one, the practitioner who is engaged in the process, and the last one, the intended user. So let's put down the following on the basic elements. Say that an assurance engagement has the 5 basic elements. An assurance engagement has the 5 basic elements. This include number 1, suitable criteria. Number two, assurance report stroke opinion. Number 3, evidence stroke engagement process. Number 4, subject matter. The number 5, the three-party relationship. In bracket, fractionnaire, responsible party, and intended user. Responsible party and intended user. If you can draw this over there. You work with it now? Yeah. You work with the now? Does Helen have something to say? We can start president number one now. One of the element, three-party relationship, three-party relationship, three-party relationship. Number one, three-party relationship. This consists of a responsible party. This consists of a responsible party, practitioner, and intended user. Practitioner and intended user. Then let's start with the responsible party. Responsible party. This is the person who prepares the subject matter. This is the person who prepares the subject matter. This is the person who prepares the subject matter. This is the person who prepares the subject matter. The next, let's go to the practitioner. This is the professional. This is the professional accountant. This is a professional accountant who evaluates the subject matter. Who evaluates the subject matter. E.g. financial statements. So as to express an opinion. The next we go to intended user. This is the recipient of the assurance report. This is the recipient of assurance report. This is the recipient of an assurance report. This is the recipient of an assurance report. Let's go to number 2 element, subject matter. So what's a subject matter? This is what is being evaluated. This is what is being evaluated. This is what is being evaluated. And an opinion expressed against. And an opinion expressed against. And an opinion expressed against. E.g., historical financial statements, historical financial statements, IT systems, IT systems, IT systems, internal control systems, internal control systems, etc. etc. Then you go to the third element, suitable criteria, suitable criteria, suitable criteria, suitable criteria. This is the standard or benchmark. This is the standard or benchmark. This is the standard or benchmark or threshold or threshold against which the subject matter, against which the subject matter, against which the subject matter is measured or evaluated, is measured or evaluated, is measured or evaluated, is measured or evaluated. E.g., in an audit, e.g., in an audit, e.g., in an audit, the criteria is the financial reporting framework, the financial reporting framework, the financial reporting framework, the financial reporting framework consisting of IFRS, consisting of IFRS, consisting of IFRS, IS, gaps, Companies Act, Companies Act, Companies Act, disclosure requirements, disclosure requirements, disclosure requirements, etc. Disclosure requirements, etc. Let's go to the characteristics of a suitable criteria. 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 Point A, relevance. Relevance. So you have to use a criteria that's relevant. Number two, understandability. 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 Number three, completeness. Completeness. Number four, reliability. 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 Number five, neutrality. 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 So those are the qualities of a good criteria. Then you go to number four, is opinion stroke assurance report. Opinion stroke assurance report.
So that is a characteristic of the standard.
Here on the elements, number four. We're done with the characteristics. Number four, opinion stroke assurance report. Assurance report. The opinion is the conclusion The opinion is the conclusion. The opinion is the conclusion of the practitioner, based on the work done. Based on the work done. Based on the work done. Regarding whether or not, regarding whether or not the subject matter conforms to the identified criteria, conforms to the identified criteria, conforms to the identified criteria, conforms to the identified criteria. Yeah, criteria. The opinion is meant to provide. The opinion is meant to provide. The opinion is meant to provide. The opinion is meant to provide the intended user. The intended user with a level of assurance. With a level of assurance. With a level of assurance regarding the subject matter, regarding the subject matter, regarding the subject matter, regarding the subject matter, which should be included in the assurance report. We should be included in the assurance report. We should be included in the assurance report. We should be included in assurance report. Is Lisa, now Lisa, what are the gaps? Lisa, now Lisa, what are the gaps? They are part of the criteria in terms of financial statements. The generally accepted accounting principles, which are basically the conventions under which the financial statements are normally prepared. The conventions under which the financial statements are normally being prepared. These will come with the double entry concept in accounting, prudence concept, maturity concept, the going concern concept, etc. The generally accepted accounting principles. Okay, then we go to number five. Number five, which is evidence stroke engagement process. Number five element, evidence stroke engagement process. Evidence stroke engagement process. Assurance engagement are planned. Assurance engagement are planned. Assurance engagement are planned. Assurance engagement are planned to obtain sufficient appropriate evidence. Sufficient appropriate evidence regarding the subject matter, sufficient appropriate evidence regarding the subject matter, compliance with the intended criteria, compliance with the intended criteria, compliance with the intended criteria. So that's the last element, which is evidence for the engagement process. Before you conclude, you must obtain any evidence. That evidence will form the basis of what your conclusion. And to set up your evidence, the evidence that you're gathering, it needs to be what? It needs to be sufficient. That evidence needs to be sufficient, and of course, it needs to be appropriate. There is implication of these ones when it comes to the collection of the audit evidence. This is normally the quantitative aspect. The quantitative aspect of the audit evidence being gathered which is now on the amount. It was considered how much will be considered to be sufficient evidence. What amount shall be considered to be sufficient what? Audit evidence. Kuna factors hapa, because audit is by performing procedures, procedures. Like the level of the experience hapa. The level of the experience of the personnel shall determine the level of the sufficiency of the auditor with the evidence. There can also other more factors. And when it comes to the appropriateness of the audit evidence, is based on two things. One is what we call reliable. So reliable is determined by the source, and also the nature of that evidence. Where do we get that evidence from, and what's the nature of that evidence? A couple can be having internal source and external source. External source evidence will be more reliable than internal source evidence. In terms of maybe the nature of documentary evidence, to keep on photocopy evidence, I'll have to put original documents. Original will be more reliable than the photocopy evidence. Then the second one is what we call relevance. You say good evidence appropriate, so it's also relevance. So relevance is on the validity of the assertions. The validity of an assertion being correct. The validity of the assertion being correct. Those are the 5 basic elements of assurance engagement. So before we move on to something else, you can refer to this question on pilot paper, December 2021. Pilot paper, December 2021. Pilot paper, December 2021. Pilot paper, December 2021. On question number 4D. Pilot paper, December 2021. On question number 4D. Pilot paper, December 2021. On question number 4D. Question 4D. Question 4D. Do you have all the questions? Is there maybe in a soft copy? Or a soft copy for group? Not yet. Not yet. Okay, it's a short one. Yes, Grace, I've understood you. It's a short question. Let me just read in a sema. Describe 5 elements of an assurance engagement. Describe 5 elements of an assurance engagement. Describe 5 elements of an assurance engagement. That one we can do still. The 5 elements of an assurance engagement. Sio tunaweza fanya. Tunatumia nini? Yeah, crest. Just use a crest to identify the 5 elements of assurance engagement. Okay, I think kuna question ingine, though I don't have this one. Kuna one who was August 2022. August 2022 paper. August 2022. Do you have it there? August 2022. You have it? We check up a question. I don't know this question. 3. Question 4. To August 2022. August 2022. Question 2B. Yes, Joyce Amepata. August 2022. Question 2B. So in a summary like this, auditors are frequently required to provide assurance for a broad range of non-audit engagements. Required. Summarize the 4 elements of an assurance engagement. Summarize the 4 elements of an assurance engagement. That's also we can do. So identify the crest elements. So let's take some few minutes break. From there, Makona realized one year to exactly I did this station. Financial instruments, Wameenda break wakapotea. Wameenda break wakapotea. So we continue. Taka tuende kwa classification of assurance engagements. Classification of assurance engagements. Classification of assurance engagements. Classification of assurance engagement. The two classifications. Number one, reasonable assurance, reasonable assurance engagement, reasonable assurance engagement versus limited assurance, limited assurance engagement, limited assurance engagement. The number two, we have what you call attestation engagement. Attestation engagement versus direct reporting engagement. Direct reporting engagement. Direct reporting engagement. So let's start with the first one, reasonable assurance engagement and a limited assurance engagement. Reasonable assurance engagement versus limited assurance engagement. So when we began this unit, we said about auditors are expected to provide what we call reasonable assurance. Auditors are normally expected to provide reasonable assurance and not what you call absolute assurance. Is absolute assurance. This means over the financial statements as a whole, or the subject matter as a whole, is being 100% correct. There is no mistakes. There is no any form of the statements contained in such kind of information. But this was something that could be less than 100% accurate. Less than 100% accurate. This is what is normally expected when it comes to the audit engagement. We have reasons why absolute assurance is not possible nowadays. The reasons why. It's not possible for auditors to provide absolute assurance over the subject matter or the financial statements. One is the manner of how audit is normally done. Use what we call the sampling technique, or use a sampling technique, where you don't examine the entire population of items, but just a few of them are selected and subjected to normal auditing tests and procedures before being able to draw a conclusion. This one number. It's not possible for us to get what we call absolute assurance. The number two is when it comes to the auditors on a judgment. Like it's a judgment, they're not going to be conclusive, but persuasive in terms of the audit evidence they obtained. And in the process, they can also be what? Subjective. They can't be subjective in the process. The other one is what we call the collusion. Parties coming together to conceal illegality or a fraud, and becomes so difficult to take such kind of fraud. Number four is due to the inherent limitations of the internal control system. So back you need to get the differences, so you know the difference between reasonable and limited assurance. The easiest way is to identify what you call engagement risk. In the definition of audit, you must be able to identify what you call engagement risk. The reasons why you undertake either reasonable or limited assurance is to reduce the engagement risk to a low level. The objective is to reduce the engagement risk to a low level. The other way is in terms of opinion normally expressed. The end of it is that if someone reduces that particular risk by collecting the sufficient appropriate audit evidence, we should be able to conclude about the subject matter. But either stating yes, it's a positive opinion or it's a negative opinion. A negative opinion. So reasonable, we reduce the risk to low level as the basis of expressing a positive opinion. For limited amount, we reduce that risk to a low level, but normally greater than the risk under the reasonable assurance as a basis of expressing a negative opinion. So let's start by the first one here, reasonable assurance engagement. Reasonable assurance engagement. Reasonable assurance engagement is already to go here. So we go to, we start with the first ISO 2, Reasonable. Yes. Subtopic ilikuwa ni classification of assurance engagements. Classification of assurance engagements. Mwenye akona notes za introduction for today's class, Sadia Joyce. Joyce ana request notes. Joyce, unaweza saidiwa na Liz. Liz was there at the beginning. Liz or even Dennis, you can liaise with the two of them. So let's start with the reasonable assurance engagement. This is where the objective, 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 this is where the objective is a reduction, is a reduction, is a reduction of assurance engagement risk, is a reduction of assurance engagement risk, of assurance engagement risk to an exceptionally low level, to an exceptionally low level, to an exceptionally low level in the circumstances, in the circumstances, in the circumstances as a basis, as a basis, as a basis for positive form, for positive form, for positive form of expression of opinion, of expression of opinion, of expression of opinion. And let's go to limited assurance. Limited assurance engagement, limited assurance engagement, limited assurance engagement. This is an assurance engagement. This is an assurance engagement. This is an assurance engagement with the objective, with the objective, with the objective of reduction, with the objective of reduction, of the objective of reduction, of the objective of reduction of assurance engagement risk, of assurance engagement risk, of assurance engagement risk to an acceptably low level, to an acceptably low level, to an acceptably low level, to an acceptably low level in the circumstances, in the circumstances, in the circumstances, but where the risk is greater, but where the risk is greater, but where the risk is greater than a reasonable assurance, than a reasonable assurance engagement, a reasonable assurance engagement as a basis for negative form, is a basis for negative form, is a basis for negative form of expression of an opinion, of expression of an opinion, expression of an opinion. Yeah. Sasa audit iko na notes mingi na huwezi kukram kila kitu. Just need to be having the relevant points. And from here, come explain what's meant by the term reasonable assurance engagement. What comes to mind is engagement risk, opinion. The same also the limited assurance, engagement risk, and also opinion. So we can ask ourselves, what's an engagement risk? What's an engagement risk? Well, that's what's being reduced to a low level. So, kuna chance where the auditor may express incorrect opinion. The chance that the auditor may express incorrect opinion, that's what we refer to as what? Engagement risk. Like auditor could be saying the financial statements do reflect true and fair view, but actually it does not reflect a true and fair view because it failed to do the job. That element is what we refer to what? Engagement risk. You have three components of an engagement risk. Three components of an engagement risk. The first one, there is what we call inherent risk. The chance that your subject matter is materially misstated, but due to reason not related to the controls put up in place, not related to the controls put up in place. Therefore, maybe due to lack of the management, integrity, and the staffing of the accounts or the finance department, necessary pressure exerted by the staff by the management. The number two, we are going to call the control risk. The second component, control risk. Sasa easy about that subject matter will be materially misstated because of the weakness of the internal control system put in place. Due to the weaknesses of the internal control system put in place, maybe incapability of detecting material what errors. The number three, we have what called the detection risk. Detection risk. Detection risk. This is now due to the auditor's own procedures. Auditor's own procedures being performed during the audit process to not be able to detect the material what mistake. So these are the three main components of the engagement risk. We want to try to do what? Reduce them to a low level. So in those two definitions, we have mentioned positive opinion and negative opinion. So what do you mean by those two terms there? Positive opinion and negative opinion. So let's start with the positive expression of opinion. Positive expression of an opinion. Positive expression of an opinion. What does those two terms mean? Positive expression of an opinion. Positive expression of an opinion. So those two opinions are expressed in the report. There is a standard wordings, how they are normally included in a report. So let's start with the positive form of expression of an opinion. So open quotes, in my opinion, the subject matter reflects, in my opinion, the subject matter reflects a true and fair view. In my opinion, the subject matter reflects a true and fair view, and conforms to the identified criteria. 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 Or in my opinion, the subject matter does not reflect. Or in my opinion, the subject matter does not reflect a true and fair view, and does not conform to the identified criteria. 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 End of quote. Then let's go to the second one, negative form of expression of opinion. 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 So open quotes, nothing has come to my attention. Nothing has come to my attention. Nothing has come to my attention to cause me to believe. Nothing has come to my attention to cause me to believe. Nothing has come to my attention to cause me to believe that the subject matter does not reflect. That the subject matter does not reflect that the subject matter does not reflect a true and fair view, a true and fair view, a true and fair view, or conform to the identified criteria, 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 or these matters have come to my attention, or these matters have come to my attention, or these matters have come to my attention on this basis, on this basis, on this basis. I believe the subject matter, I believe the subject matter, I believe the subject matter does not reflect, does not reflect, does not reflect a true and fair view, a true and fair view, a true and fair view, and does not conform to the identified criteria, and does not conform to the identified criteria, and does not conform to the identified criteria, and does not conform to the identified criteria. End of quote. So that's what's meant by those two terms, positive opinion and after negative opinion. So anytime when we are going to explain what's meant by them, you can also relate them to the types of engagement there. For positive, reasonable, allow negative, and limited assurance engagement. So let's start with the upper subheading, differences between reasonable assurance engagement, differences between reasonable assurance engagement, differences between reasonable assurance engagement and limited assurance engagement. Differences between reasonable assurance engagement and limited assurance engagement. So, yes, you need to get to know the difference between these two. Yes, well, sometimes it's a part of example of explain what's meant by this and this. So maybe just in terms of identifying the differences, you can be giving an explanation of whether reasonable or not limited. One already about. So one of the basics of the distinction is of the engagement what? Risk. The engagement risk. For this one up is low, this one up is meaning high. Another form of distinction is in terms of meaning opinion. Opinion. For this one's up, positive opinion. For this one's up, negative what? Opinion. Another one is in terms of the procedures being performed. This was something about detailed, extensive what? Procedures. You have a lesser what? Procedures. Like in this case, I will perform a query, analytical review procedures, compliance, and substantive testing. So this was something very limited. You can only do maybe query and analytical review procedures that are able to contribute. So try to put on aside this end there. Then when we meet next week, then learn from that part.